Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark says optimism in the equity markets has fallen to almost record lows. Venture Capital Markets Association President Don Mosher warns overregulation is strangling Canada's junior markets and the end result could be 10 to 15% unemployment. We'll talk to Ross Clark right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on The Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy, Vancouver. Welcome to This Week in Money, Ross.
Nice to be with you, Jim.
What's happening on the stock market? People are waiting for something big to happen.
Well, a week ago we didn't know what the big was going to be, and as it turned out, it was the Chinese. The early part of the week with some significant moves in terms of their currency. Percentage-wise, the numbers aren't huge. It was a couple of percentage points, but in the currency market, that is a large move. So you ended up with some flight to quality early part of the week, a bit of a shakeout in terms of the equity markets at the same time. But, the bottom line is that this U.S. equity market just continues to be stuck in a really tight trading range. There's the internals on it have been poor for months after month, but the markets for the indices just aren't giving up that much ground. And one thing that's starting to show up is that the level of pessimism out there to the market, or the low optimism, if we look at it from the other side, is starting to get to extremes. The various ways to measure sentiment. The CNN has a fear-greed index, which has been sitting down in on a scale of 0 to 100. It's been between 8 and 11 for the better part of the last week and a half. That's very low, not quite to what we saw last October, but it is a very low level. Sentiment Trader, which is a great website for providing this type of information, has what they call an AIM model. That's an advisor investor model, AIM, and it looks at the advisor and investor surveys that are out there, compiles them, and comes up with a model that looks for extreme bullishness and extreme bearishness. And we are currently in one of those very extreme bearish positions, and as a contrarian, that would imply positiveness for the market. Haven't seen numbers like this since October, and then you have to go back once into 2013, once into 2012 to see the type of sentiment readings that are out there. So tends to be supportive when everyone is still thinking maybe in terms of a September-October swoon, but for now, looks as though there's reasonable support. And for the last few weeks, we talked about the loss of leadership from the biotechs, the healthcare, pharmaceuticals, and always looking to see now where the money's moving to. The sector that the investors might want to take a look at are the utilities. The XLU is the ETF for that group in the States, and it's clearly starting to show it breaking out of a nice consolidation pattern, probably has a bit of room on the upside.
Ross, so often when the stock market's in jeopardy, people start thinking about upping their gold portfolio. Do we see any hints of that?
Well, it was 2-3 weeks ago, the commitment of traders numbers really started to show some important numbers. The speculative positions were down to levels we hadn't seen in 18 months. The hedger short positions were becoming excessive. So we, right at the end of July, started to see a little bit of a turn in the market there. And with the action that happened in China this week on the currencies, that was enough of a spark to really get things to life. Gold market had one of its best weeks in the last 3 months. And what I like about the way we've come off this bottom is that silver led off the bottom. The silver-gold ratio has been showing an improvement towards silver in a moderate way, not excessive. And for me, what's most important about that ratio is not the absolute level, but it's how it moves. And a lot of things that I look at, I'm interested in the rate of change, because as things happen too quickly and become excessive, then you invariably look for them to settle back. And in terms of the ratio on the silver to gold, we put a relative strength index on it, and typically bottoms around 30 or just under, and it did that right at the end of July. It's improved right now so that it's in the mid-50s, and what you would expect and see in these rallies the last few years is that if the relative strength index on the ratio gets up around 70, that becomes your optimum selling point as far as the metals are concerned, and the miners. But I don't think we have to be concerned about that in the short term, because the COT numbers, the other things I look at, that were really flashing some pretty strong signals at the end of July, the rallies out of that typically take anywhere from 1.5 to 3 months. So here we are, just the better part of a few weeks into this move. Daily action was pretty good into the middle of the week, got a little bit overbought. You would typically see maybe a 1 to 4 day pause here, and then another attempt on the upside. Give people an idea of where we might go to. The tend to rally up to the 20 or 50 week moving averages. So I think on the upside, be looking for something maybe in the 1150 range as a first good resistance in gold. The better resistance is the 50 week average. That would right now be up in the higher, probably around 1190 or so.
Any interest in the bond market?
Bond market's a two-way street. You have the government side of the equation doing very well. It's just slowly walking its way up. We had talked about that back in June, that the seasonal strength for treasuries carries you from June through September, and that's what we're seeing. On the other side of the coin, the high yield market, which has been a great way for the energy stocks to find financing in the last 4 or 5 years, that has been seeing lots of pressure on the downside. We're back now to the lowest levels we've seen there in a year. So the credit spreads, the ratio between what's happening on the high quality versus high yield, is continuing to move towards that higher quality side. You'd expect to see that last probably into September.
Ross, thanks a lot for chatting with us.
Nice to be with you, Jim.
My guest has been Ross Clark, Investment Advisor at CIBC Wood Gundy, Vancouver. If you have any questions for Ross, you can email him at ross.clark@cibc.ca. Coming up next, Venture Capital Markets Association President Don Mosher on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Don Mosher, President of the Venture Capital Markets Association. Welcome back to This Week in Money, Don.
Thank you very much.
You have sent an open letter to the members of the BC legislature. Can you maybe tell us about that letter and why you sent it?
Yeah, the letter came about as frustration by our association trying to make some progress. The association was founded 2.5 years ago on the back of a phone call I made to Joe Martin and expressing frustration with the regulations that had really acted as a barrier to capital flowing into the venture markets. And he said, "Why do I care?" And I said, "Well, it's going to put you out of business, Joe, because your conferences are populated entirely by venture market companies, which got his attention. It more forward with a couple of initial meetings with 8 or 10 guys, and ended up in town hall meetings. So for the last 2.5 years, we've been trying to draw attention to it. And really what it was we were hoping to put a platform together for an industry that is incredibly fragmented. It's made up of entrepreneurs. The independent brokerage houses are built by entrepreneurs. The businesses that they finance are built out of entrepreneurs. And the contractors that support the business are all entrepreneurs. So we're all dealing with our own issues, our own companies, our own employees. And then on top of it, you get regulators out there that constantly throw up more and more barriers to capital, but there is no one common voice speaking for the whole association. We put that up, expected people to join. Everybody still had their own agendas, and they were trying to do things on their own. So AME BC, for example, they're out there talking to the government of BC, complaining about regulations and barriers to funding. PDAC representing the national organizations doing the same thing. You've got the local brokers here in Vancouver trying to get hold of the Minister of Finance and discussing things with IROC and the BCSC, and then ourselves. Finally, the level of frustration hit this point because we have been talking to the BC government. And we thought we'd put this out, and the whole idea behind it was this will be a footnote for history. 10 years from now, when the venture exchange is completely gone, extinct, wiped out by regulations, no longer exists, Canada's running with 15 or 20% unemployment, the resource industry is defunct. What happened? There was an association that warned that this was going to happen, and it was going to come about as a result of regulations that had shut down the entrepreneurial spirit of the country. So, really we in here attack basically two organizations, the BCSC and IROC, the company that oversees all the registered brokers in the entire country of Canada. So there is a national regulator. And where IROC came from, if you go back a few years ago, originally it was the IDA. It was the Dealers Association. And the Dealers Association split into the IIAC. It was funded with about $3 million, and now it's funded through members of the IIAC. So every licensed brokerage firm in Canada contributes to it. But the larger your revenue, the more you contribute. So the biggest contributors to this thing are the big 6 banks. And as a result of being the largest contributors to the IIAC, they also get the most say in the IIAC. IROC was split out of there. The IDA used to oversee everything else. So you've got the IIAC and IROC split off on its own to become its own regulatory body. They're kind of, how do you explain them? They pass their own laws, they police their own laws, they prosecute you, they act as judge, jury, and they're the guys that impose the fines and suspensions on the brokers out there. And they've got no oversight, and there is no retribution to whatever they do to you. Very similar to the BCSC. The BCSC is a Crown organization that gets no funding from the government at all. They generate their own funds. And how do they generate their own funds? Fines and fees. So you've got an organization that supposedly reports to the Department of Finance that spends 80% of their revenue on salaries and rent. If they want to increase their salaries, they need to generate new regulations which impose more fines and more fees. So for an example, there's a website that the Vancouver Sun has that you can go into. I went through it. And you have to get down as deep as the 164th employee to find anybody making under $75,000. Heinemann makes $540,000. Brenda Leung makes $443,000. And we're not taking into account in inflation index pensions and holidays and all the rest of this stuff. That's just their reported salary. So Brenda Leong alone makes more money than all the premiers in Canada and the Attorney General. I'm sure she makes way more than Prime Minister Harper. So they set their own salaries within there. And we have to deal with these regulations that they impose on us. An organization whose mandate, if you go to their website, says they want a securities market that is fair and warrants public confidence. I would say, as opposed to protect the public, protect your own jobs. A dynamic securities industry that provides investment opportunities and access to capital. I would say gums up the works and prevents entrepreneurial progress. Everything that they do in there protects the jobs of basically a bunch of lawyers. And nobody in there has got any experience in what it's like to raise money in a venture market or operate a small company. They just don't understand it and really don't care about it, as long as they protect their own jobs.
Now, how come it was set up without people on the board who are members of the resource industry?
I really can't answer that question. You know, I think a lot of these organizations are created by lawyers to perpetuate more lawyers' jobs. You know, the commission itself is 6 lawyers and an accountant. If you take a look at IROC, it's overseen by bankers, economists, and you know, the chairman of Chi-X, for example, the exchange, and the head of the TSX. Those are the people that populate it. So there's no room in there for the small entrepreneurial, and there is no input from us. The last commissioner to leave the BCSC, what I was told, left due to frustration, being the only representative for the venture markets out there and being an unheard voice. It was just, I got to get out of here. So really what we're looking at is the only way for this to survive is if the government steps up and throws IROC right out of the province, because IROC's allowed to operate in British Columbia under the permission of the BCSC, and it's our Minister of Finance that supposedly the BCSC reports to. We do have good support within the BC government, don't get me wrong. And I actually made sure I got permission to use names. So we do have, on this open letter, full support from 2 senior cabinet ministers in the Liberal government. Minister Bennett, Minister of Energy and Mines, and Minister Wilkinson, who's the Minister of Higher Education, but understands the challenges that we face, because prior to that, he oversaw innovative technology. So he was dealing with venture market companies that are trying to come out with all the new technologies out there that are going to create the jobs of the future. You know, one of the goals of this letter is to try and get enough attention that ourselves and the group that represents the brokers in town can actually sit down with the finance minister and air our grievances with him. Now, he's a very busy guy, and we understand that. He's dealing with LNG issues and all the rest of it. But this particular issue represents $1.3 billion in G&A spent by mining companies in Vancouver, hundreds of millions of dollars in exploration expenditures, and thousands of jobs within the province of BC, not even talking about the rest of Canada, where you've got mining centers like Timmins and Flin Flon. Nobody up there does anything other than resource-based jobs. And our organization, we're not talking about just resource-based jobs. We're also talking about the small technology startups that need to access the capital markets. And the public has been completely cut off to it by IROC.
Well, I saw where Scotia Capital was fined something like $500,000 because they said they had unqualified investors. And I'm wondering, was this related to the venture exchange and people who they say, quote, aren't qualified to invest in risky investments?
You know, as far as IROC seems to be concerned, very, very few people in Canada are qualified to invest. They've put a set of rules in place now that, and I think, was it you did an interview with Warren Funt?
Yes, I did.
And during that interview, I think Warren Funt said to you that IROC does not have a problem with investing in the venture market. If a person has a $100,000 portfolio and his broker allots $5,000 towards a speculative investment, providing the rest of the portfolio is balanced, that's fine with IROC. Well, my question to you is, how many people in Canada have $100,000 cash? And who is IROC to decide what proper distribution is within those portfolios? Because everybody has risk tolerance, different risk tolerance and different suitabilities. Some people like to gamble, other people don't like to gamble. But IROC has taken it amongst themselves to go and put a set of rules in place that have basically blockaded anybody that has less than $100,000 to invest from having a full-service broker. The costs of surveillance and compliance are so horrendous that no broker wants to take on an account worth less than $100,000. And even with $100,000, the client had better say all the right things to the broker. Otherwise, he's going to say, I'm not going through the trouble of dealing with this person. So this venture market used to be funded, when it was a public market, by small people across this entire country. Some guy living in Smithers sees an exploration project, wants to throw $5,000 at it, phones up the broker, opens an account, and invests it without oversight from IROC. It's his democratic right to invest $5,000 and speculate on something that he likes out there. They've decided that that is no longer your right to do. If you're 65, you don't have the right to speculate. You're too old and it's too unsuitable. Their greatest concern is in 10 years, your estate comes back and it sues the broker. From what I was told today by a senior broker that's been in the business for 40 years, coming this fall, that's going to be their focus. Second and third generation liability dealing with accounts the full-service brokers are having to oversee. You can't put a buy order in anymore by having somebody in surveillance question what you're doing.
Don, how big of a problem has that ever been?
Sorry? How big of a problem has it ever been?
Yeah.
Well, it didn't used to be a problem. You used to be able to open an account on the phone. You used to be able to buy stock on the promise that you'd send in a check. And you didn't have to go through the whole ritual of filling out pages and pages of questions. It used to be, what's the purpose of this account? Speculative? Yes. 100%? Yes.
What I want to know, Don, is how many lawsuits do you know of where they went up back 2 or 3 generations and said, oh my God, this guy, invested in whiteout and now it's lost money?
I don't know of any. They're basically making this stuff up. You got a bunch of lawyers making 6-figure salaries that are justifying their existence and creating liability issues that have never existed any time in the past, with the idea that you can put a system in place that does not allow for anybody to ever lose money. You and me both know that no matter what an investment is, no matter where it falls into the risk scale, there's a chance of losing money. You take a company like Nortel. I think every broker in Canada would have put you into Nortel in 1998 or 99, figuring it was a safe investment. It doesn't exist anymore. Now, what's going to replace those companies? They have got to come out of the imperfect incubator that is called the venture market. And if we don't have that incubator functioning properly, there will be no new births of companies.
I know that the mining sector has never, quote, been sexy, but it's been something that has made Canada a great country. Why don't they want people to still invest in the resource sector, or are they just lying to us when they say they want people to?
I think the strategy here comes out of the banks. The banks have seen an opportunity to wipe out everybody in the business. They're the only ones that can afford to put up with these regulations as they compound out there. They see an opportunity to wipe out every small firm in the country and gather all the Canadian assets under their guidance. You will phone up, they will put you into their proprietary products and nothing else. There has not been enough foresight to see that they're going to wipe out the Canadian equity market as we know it. I'm not just talking about mining deals or resource deals. I'm talking technology, which include biotech and everything else. It's a really mixed bag on that venture market. Yes, mining dominates it, but that is where all these things are created. How do you fund anything? Yeah, especially mining companies. I mean, tens and hundreds of millions of dollars to get there, yes, but even smaller things, which are a couple $1 million investment, you're not going to do it through crowdfunding, and they've put incredible limitations on crowdfunding. You're allowed to invest up to $1,500. Big whoopee deal.
Well, that won't even buy you a tire on a mining truck.
No, the reality is totally left, with the lawyers entering the picture and the banks taking over the business.
We're speaking to Don Mosher, president of the Venture Capital Markets Association. Well, I heard the banks consider it their right to take 2% of your income no matter what.
Correct. So if they can gather all the wealth in Canada under their guidance and they collect 2% of that a year at no risk, it's pretty good money.
Well, I no longer bank with a bank that was doubling its fees every year.
Well, the only way to get even with the banks, Jim, is you need to own them. You need to own stock in it, because they will make sure, the banks themselves are laying people off. They report record profits, and at the same time they'll lay off 1,500 or 2,000 people, because they continue to integrate technology that increases productivity. And that is right across the globe. I was reading an article yesterday about motorcycle factory in India. They replaced 12 painters with 4 robots that never paint over the same spot. They go 24/7. There's no sick days. The reality of it is, one article I read estimated that 50% of all manufacturing jobs on a global basis will disappear by 2030 due to computers and robots. Now, if the venture market, per se, whether it's the public market or the private market, is not incentivized to get out there and create new technologies and new jobs to employ people, what is this? An entire country of unemployed people living off social welfare? And that's my prediction in 10 years. That's what this country's going to be looking at. 15, 20% unemployment, especially in rural areas in northern Canada, where companies have not had the ability to finance and go and find new deposits and put them into production. Everything will dry up. And that's why Mr. Bennett gives us his support. Here is the Minister of Energy and Mines, who's got a very healthy mining portfolio right now. Bruce Jack's just being built by Pentium right now. They employ 120 First Nations people there. But he sees the pipeline dying. He realizes that we can't raise money. And he, after several meetings, understands that there's forces outside his portfolio that he can't deal with. The securities issues, those are outside his portfolio. So he can go and streamline regulations for getting mine permits put in place. He can streamline the environmental process. He can ensure safety of tailings dams. All that stuff's within his jurisdiction. But these security regulations, they're outside of his jurisdiction. And the level of frustration by him is unbelievable. And I got the same feeling from Minister Wilkinson from the technology side. He can see what the blockages to capital raising are. This stuff has got to be funded by the public. The government cannot fund this stuff. It's not something you can take your tax revenues and fund exploration expenditures. You have to incentivize people to invest in risky situations with the promise of maybe a massive return. It's a risk-reward formula that will never change. For everybody to be out there putting their money into no-risk investments where you're getting a half point or a point, you're going to go broke because of inflation. So it doesn't matter what they do, you're going to lose money on it. You might as well take a risk. My brother-in-law farms 15 sections of land in Saskatchewan. If the weather's bad, he loses his crop. He's got nobody to go sue. Same with a fisherman that has a problem with pulling in fish or his boat sinks. I mean, the Canadian economy lives and breathes risk. And these guys within the securities regulators have decided to withdraw all risk out of our economy. It's impossible. All they're doing is shutting it down.
Has anyone brought this up during the federal election campaign?
You know, that's frustrating. You watch these political ads, and they're focused on legalizing marijuana and stupid issues without actually taking a look at why job creation is suffering so badly in Canada. We can point our fingers at the commodity prices and say, look what's happened to the oil price. Look what's gone on with gas. Look at the commodity sector down. But the fact of the matter is, the country has always grown because you were able to do things. Now you can't do anything. You run into a regulatory barrier no matter where you turn. The lawyers have taken over the country.
Well, people have complained about that for years when it comes to just about every other issue, but they don't understand, I think, where it hits them, and that's in the wallet.
Well, I can tell you from where we sit right now, I voted for the Liberal government. I support the Liberal government. I believe in the platform that the Liberal government stands on. But if you think back to when they got elected in 2007, they got elected in on reducing regulations that would allow the mining and forestry businesses to get back active and make money. And they did a great job of that. And in the meantime, they have allowed the securities regulators to come in and completely shut down business development. You just can't even start things up now. You take a look at the number of firms in town now. So Vancouver, the mining capital of the world, we used to have 35 or 40 brokers here in town, which you could go and fund deals through. It didn't matter what it was. I mean, yep, if it was a hot commodity cycle, you could go and fund mining companies. But back in 98 to 2003, it became a high-tech bubble. Y2K was the rage. You could go fund through 35 or 40 brokers. We're down to 7 brokers in town now, and that's going to consolidate down into 6 shortly, I believe. You want to go and try and fund anything when you've only got 6 places you can possibly go in Vancouver, and they're under so many restrictions by IROC that they don't want to put their clients in any of it. They're just handing over all their clients to their wealth management division. Here, you deal with them. I'll try and collect money. Make sure you generate enough trailing fees to keep me alive. It's sad.
Is this chasing Canadian investment money overseas where they have fewer regulations?
No, because the average Canadian retail investor that obviously IROC and the BCSC consider so ignorant they can't invest in Canadian companies can't figure out how to access overseas markets.
But what I'm saying is people aren't as stupid as the government thinks they are.
No, but they tend to get drawn into the ETFs. I mean, if you watch BNN, you know, the bigger guys that come on there are all talking about ETFs. Technical analysts and all the rest of it are all pointing at the bigger companies. They do. One thing about BNN, though, they do give fair time to the venture market, and they are trying to figure out where the problems lie. I mean, Andrew Bell does a great job. They've got their great commodities hour every day. I take my hat off to them, but it's been a downhill battle. And they will put the regulators on there, and they're political in nature. They say exactly what they think they want you to hear. But you take a look at the index for the venture market right now. It's down at, I don't know, 575 or something today. You know, in 2007, that thing was at 3,300. 2008, it dropped down just below 7. It got down to about 650 or something. Rallied up to 2,400, and now we're down below 500. We've got 700 zombie companies on the board out there right now. You know, things trading no bid, a half penny offered. They don't even comply with the regulations. They should have been delisted by the venture exchange. The venture exchange doesn't care about the investor either. Otherwise, they would have suspended the CPC program 2 years ago, and tried to put a program in place where they limit the number of listings and try and encourage companies that want to go public to take those vehicles, recondition them, restructure them, refinance them, and at least offer a portion of recovery to the investors that were brought into them in the first place. There's been no effort by the exchange to do anything to help people recover lost money. Quite the opposite. The CPC program is still an active program. Let's continue to generate more shells. Why? Because they're in it to make money. They should be a utility, and they're a for-profit organization basically owned by some of the banks, and all they care about is continuing to generate fees. So nobody's trying to protect the public. Nobody's looking out for the public's best interest out here. They only look out for themselves.
We're speaking to Don Mosher, president of the Venture Capital Markets Association. Don, what should people do if they're concerned about over-regulation of the junior markets?
Well, I mean, everybody of voting age can contact their politicians. They can go to our Facebook page and give us their likes and dislikes. They can join our association. They can show their support to their brokers, let them know they're on their side. But basically, it's a political issue. The only people that can change this are the elected politicians in place right now. And all we can do is try and put pressure on them to open up their eyes. These organizations have made the regulations so complicated that they police them themselves. They've taken it out of the hands of the RCMP. They've made it so complicated and so convoluted that the politicians are scared of it.
That's scary if it's too complicated for the Mounties to look at.
Yeah. It's the fact of the matter. As I said earlier on, IROC passes their own regulations, polices their own regulations, prosecutes, judge, jury, and sentence. And DCSC is exactly the same way. Hey, we want raises, let's generate more regulations and create more fines and fees. And the government's fine because they're not paying any money into it. Smartest thing they should do is maybe the government should disband the BCSC as it is, restructure it, make it a government organization that runs on a budget and takes away their ability to generate revenue and give them all salaries that make sense. You know, when you got to go all the way down to number 113 within that organization to find somebody that makes less than $100,000. This market is on its deathbed. They just took on another floor in a Cadillac Fairview building and hired more people. Does any of this make sense? Is any of this logical? I don't think so.
And what kind of downsizing has the BC mining industry experienced over the same time period?
Oh, I can't even describe to you how bad a shape the mining industry is in Vancouver. It's depressing, you know. There's people literally committing suicide down here. Anybody that has this idea that, you know, the guys downtown Vancouver are running around with white-collar shirts and gold cufflinks are out of their mind. These are people with families trying to make a living. A lot of them have mortgaged their houses to support their companies. They actually believe in what they're doing. And in the meantime, you'll get some company barely scratching by that has a BCSC bureaucrat contact it and say, we just went through your website and all your presentation material, and we found 6 issues in here that are non-compliant. We feel that you're misleading the public and these need to be corrected. So you have to drop everything right now and go and correct this stuff. Well, that guy may be in the office by himself, not have any money in the treasury, and he's not qualified to do the correction. So he has to go out and contract a qualified geologist to come in and correct these deficiencies and send them back to the BCSC for review, and then the BCSC reviews it, and of course there's going to be a fee involved in that, send it back with approval, and then you got to send out a news release saying that, you know, we had these deficiencies within our material and they have now been corrected. And I'm talking simple stuff. Combining measured and indicated resources under one number. Well, that's non-compliant. Yes, it's non-compliant. I admit that's non-compliant. But you're not trying to mislead anybody. That's not a form of fraud. That's just a bureaucrat justifying his $100,000 salary because he's got nothing else to do. There's no financings being done. There's no IPOs being done. It's dead.
I remember once having a government form returned to me because I had filled it out in black ink instead of blue ink.
There's an example. You remember how long ago did we have our first interview? A year and a half ago?
Yes, we did.
Remember how black it was then? Well, it's way blacker now. You know, the index has probably dropped another 50% since we did that last interview.
I know we like to do positive stories about the discovery of new diamond mines and so on. But how did they discover those mines if they didn't have the capital to look for them in the first place?
Everybody thought Fipke was out of his mind. Fipke's made hundreds of millions of dollars as a result of the risks that he took. Not only financially, but just think of the risks he took to his health and welfare tromping around in the Arctic by himself. Nobody ever thought there were diamonds in Canada. That was absurd.
Now we have diamonds in Saskatchewan.
Correct. So no, if you allow people to invest in dreams, they don't all work out, but some of them do, and the return is spectacular.
Again, Don, you said talk to the politicians. What stake do they have, or do they look at the resource sectors being so small it doesn't count anymore?
I would say the resource sector represents 90% of the Canadian economy. If you pull out our manufacturing sector, so Bombardier, a few automobile plants in southern Ontario, and just take a look at the resource sector, oil and gas, mining, fishing, farming. So anybody manufacturing tractors, guess what? That's part of the resource sector. Anybody manufacturing pipes for the oil and gas business, same thing. All the geoservices, all the engineering firms, anybody working 50 kilometers north of Toronto, unless they're working for the government, are involved in some form of a resource sector business. That is all we do. And this idea that you can have an investment business or an investment industry with no risk is as insane as saying as you can be a resource-based economy with no risk of corrections when the commodity prices drop. The reality is risk is part of life.
Don, this really does seem to be not just an uphill battle, an up mountain battle. Are people giving up on it?
Well, we thought we were giving up on it when we put this letter together as a footnote to history, but all of a sudden it seems to have taken on some traction again. When you get someone like Minister Bennett say, listen, you can use my name, we fully support your letter, you can tell the press that I do, and then I get calls from the top guys at AMEBC and places like that saying, listen, we need to get hold of some of the big unions who also rely on the jobs and get them involved in this. Now all of a sudden you're talking tens of thousands of people that are waking up to these issues that have been buried, basically, and people have been ignorant of it. Bottom line to me on what IROC has done to the Canadian public is taken away their right to invest as they see fit as an adult. So they have gone and taken away my rights in a democracy as a citizen. Now, they didn't put it out there that way, but that is the fact of the matter. Anybody over the age of 18 should be able to make up their mind just the way they can go buy a beer and invest their money as they see fit.
Don, thanks a lot for chatting with us, and maybe remind folks once again about the websites they can go to.
Yeah, our website is venturecrisis.org. We've also got the letter up on a Facebook site if you go there. It's nice to see we've had over 500 people visit it. Anybody's got any ideas, wants to help, got criticisms, anything else out there, feel free to get hold of us, and we'll listen to any ideas that anybody has.
Thanks again for chatting with us.
Thank you.
My guest has been Don Mosher, president of Venture Capital Markets Association. The website, venturecrisis.org. That wraps up the show for this week. Thanks to our guests, Ross Clark and Don Mosher, and thank you for listening. Comments or questions for This Week in Money can be emailed to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.